Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is live Forex market review, so let's get into it. Before we do, if you can read through the disclaimer, that would be great. For those on our YouTube live stream, I cannot see the chat, but you're more than welcome to watch or join us in the webinar so you can chat to us. For those in the webinar, I've got the chat box open and the Q&A box open, so you can talk to me through both. So everybody, please just read through the disclaimer. All right, we might move along. Now, if you don't know me, my name is Duncan Cooper, Senior Market Strategist and Trading Mentor here at ACY Securities. Full-time Forex trading, been trading now for more than 15 years and mentoring clients for more than 10. If you want to contact me about the webinars, my email is there, duncan.cooper@acy.com. Through the week, you can connect with us on our website, acy.com, go to the Market News tab, or at our YouTube channel, ACY Securities Australia. And if you want to connect with me personally, just head over to my Linktree page. You'll find all my links there under my handle, Duncan Cooper FX. If you want to get access to the charts, the layouts, templates that I'm using in MT4, just contact Nathan.bray. His email's there, nathan.bray@acy.com. I'll just put that in the chat for you. So any questions, Nathan will be able to help you out with anything. All right, that's in the chat. All right, so first up, we'll just have a look at what the news items are coming out for the day. Now, we do have a big news item coming out this evening. All right, Thursday. So 11:15 p.m. we have the Eurozone main refinancing rate and monetary policy statements. Not expecting any change there. 11:30 we have the advanced GDP QQ, unemployment claims from the US, and further for the euro at 11:45 p.m. we have the ECB press conference from the interest rate decision. So probably from 11:15 through to about 12:15, it's going to be highly volatile for the euro dollar, or euro crosses, depending on what gets said and what gets changed or not. Not expecting a change. So it'll be more about probably what the ECB says regarding the economy and inflation expectations moving forward and interest rates over the coming period. Okay, so be aware of that. And late Friday, all these times are my time, Queensland time. 11:30 p.m. on Friday from the US, we have the core PC price index data coming out as well. But that's not till late tomorrow. So the big one for the day is the Eurozone interest rate decision. Of course, we've got this US news here that can definitely drive the market as well. Yesterday's US news was very US dollar positive, so could be lots of things going off in the mix between 11:15 and 12:15 my time. All right, so bear that in mind. All right, let's get to the charts. We'll start with the dollar index. I did have a day down yesterday, but got support on day support high here. And we've probably seen on this day chart pretty much a 62% retracement to day support. So in all probability, unless something changes, that could have been just a profit-taking dip. And we've had a 62% retracement. Yes, we could come down to retest that level once more. It's the layer of support. Old resistance being support there. Are we getting ready for the next leg? Time will tell, but that's maybe how things are getting mapped out. So if that's the way things map out in the dollar index, pairs to the US dollar are going to be moving down. Of course, the makeup of the US dollar is at least 50% based on the euro. So depending on what comes from the Eurozone interest rate decision today, well, I'm sure determine the direction of the dollar index. Now, the S&P 500 May have had its top day in terms of the move up to 4 or 5 days up, a bit of a inverted hammer doji kind of candle there. Maybe it's time for at least 1 or 2 days down. As I've been saying, we've moved above the all-time high at 4,816. Can we pull back to that area for support now? Trend is up, but can the buyers hold the trend at the all-time high to continue the move up? If we don't hold above the all-time high on a pullback, we may be dealing with a false break. But at the moment, we'll have to go for the bullish side of price action at the moment, because that's what's occurring. So if you do drop to your monthly chart, you'll see here we've moved above the all-time high, both on the monthly and weekly chart here. So can it keep itself above the all-time high and continue the bull market? All right, so I would, if I wanted to trade this, I would be looking for a pullback to broken resistance becoming support at 48.16. All right, euro dollar. Let's stay on the 50-minute chart for a moment. You can see we false broke 109 yesterday, and we're pretty much getting capped there potentially ahead of the news event. So looking at the day chart here, got a fib drawn across the day chart high to low here, and we did get a 62% retracement yesterday, back to a bit of an area of 4-hour resistance, which we'll see on the 4-hour chart, and an imbalance got filled here. So the downtrend is holding itself. It's rallied to an area of anticipated resistance. I marked that in on Tuesday, this little area of imbalance that maybe could need to get filled. And from that day chart, swing point to low point, high point to low point there, we've had a 62% retracement. So through the news events, all these 4-hour highs here could be the area of resistance. Of course, we could come up and re-challenge the 62% level at 109.31. Don't know whether you can hear that. I've got a whole bunch of birds flying over my head, over my house. All right, so an area to watch here would be these 4-hour highs here. 109.06 up to 109.16. That area today could well be a rally point, and you could be monitoring, since we failed at that 62% level, you could be monitoring the smaller range that got formed yesterday. 62 levels at the start of that area, 79% levels just above that area. So really, we do drop down to 15-minute chart. Today, I would anticipate the 62 to 79% area here to be the sell zone. Price may only come to the 109 level, but you have to wait and see what kind of volatility comes from the interest rate decision, and then see what comes around. We could come up to retest yesterday's high where we failed at the 62 level of the day chart range, or after that sell-off yesterday, we may well just see a move up to the 62.79% area for another day down today. That's what I would be watching there on the euro dollar. Euro yen, it's similar on the 50-minute chart. This is getting capped just underneath 161, getting support yesterday at 160, but it's been breaking down, and I've been discussing a turnaround from this broken day support level at 161.24 where we traded down. Been looking at this as all corrective. We came back up to broken day support where we had that big drop. That's 161.24. Now we could definitely test that level again today, depending on what the market does on the interest rate decision. But we put in a minor lower top here, having a bit of a bounce on this top just there at 160.17. Now, I would be monitoring that high point to this low point. So on the 4-hour chart, it's this range here. So we've had a sell-off, we're rallying back up. 79% levels, just fractionally above 161.24. But that would be an area we'll be watching for a possible retest today, assuming we can get above 161. All right. And I can highlight all that on the 15-minute chart. Closer look. That's in the red zone of the pivots too. So this area up here, if we were to get up to there, that could be where we top out today. However, what day we're into now? Late Tuesday, after we sold off 161, here was resistance to move down. So 161 could well be resistance today. So, from the 62% level, it's at 161.04. Volatility might drive it up to 79% level, but for our trend is down. This is just corrected back up after the most immediate trade down. As well, if we get up to this area here, looking at this 15-minute chart, there's a little bit of an imbalanced area here that hasn't been filled. So that would all line up with this area over here. So that would all make sense, depending whether volatility can get price driven up to that area. Okay. Of course, you have to make a decision. Do you want to trade any euro cross ahead of the interest rate decision at the moment? Probably not, but that's your own decision. Because we could be topping out here right now, just underneath 161. And same with the euro dollar, we could be topping out here at 109. All right, euro pound, it's down to support, so it's a little bit difficult at the moment. If you go to your monthly chart, let's get rid of this fib. Down to monthly support. So you can see there's the monthly resistance we held there, trading down now to monthly support. All right, if you go to the weekly chart, you'll see that we're on monthly support. Lots of weekly support levels here. There's a weekly support level just there at 85.43. So 85.47 monthly, 85.43 weekly. Might put the most newly formed level in 85.43 now. It's all the same thing, but it's just the most immediate level that's been formed over the last couple of months. This one, you might say, is a little bit hidden with all this price action, but this is very much immediate. It's at 85.43. So you have to be very careful now from 85.43 to be a seller because we're into support. Yes, there's a low down there, 84.92, but you're into where the buyers were accumulating their positions last time to move it back up. So we have a bit of a spinning top positive day as well here. So this could be a double bottom. So depending on your overall viewpoint, I mean, my viewpoint is we're in a downtrend. Monthly is lower top, lower bottom, lower top, and the weekly is lower bottom, lower top. So my trend bias is to the downside, but we might get a bounce off here in the short term because we're in a buyer's area. So that doesn't mean to say it's going to change any trend because the day trend is down too. It may just mean that we get a bounce back up within this range to the 4-hour chart, and watch the higher up 62.79% area for the opportunity for a turnaround to sell up from the bounce for the trend to continue to try to break below supports. So that's what I would look for. Wouldn't be trying to engage down here on the short side anywhere near 85.43. Of course, if you think this is a major bottom coming in, you could be fishing for an opportunity to get long if you can see your setup. But overall, monthly, weekly, and day trends are all down. So I would look for a move back up, look for an opportunity to trade back down from a higher level. All right, pound dollar. All right, this is what I marked in on Tuesday. I actually got short up there yesterday. Price is, it's a little bit difficult in terms of its trend. It did move down just to a lower bottom from a higher top. Let's put a higher bottom in here of sorts, but this top is lower to that top, and it actually held at this kind of maybe left shoulder, head, right shoulder affair. Very range bound. I said that on Tuesday. I said watch the top of the range. So are we failing at the top of the range to move back down to the bottom of the range? That would be, it's range bound, so we have to trade it like it's in a range at the moment. So that failure up there yesterday, this may come up to offer you the sell now. Look at this as a decline rally opportunity. 62 level overlaps with there, so this could form some kind of little left shoulder head, right shoulder at 62. With it being so range bound, if you're not already short from up here, I would look to the higher 79% level. However, price might not get to the 79% level, so it could simply be a little left shoulder head that's obviously dropped down, coming into here for the shoulder there. Or if you wanted to, you could try to look at the 79% level for an entry if any volatility, maybe from the US dollar news later in the day, got this up there. All right, the 62 level, 127.47 overlaps very closely to the 79% level of this range at 127.44. So there's a bit more here. More traders might be looking at this area for a sell point at 127.47. That's assuming we can get up there today. Price might not want to get up so high, but that would certainly be the level to watch if you're not already maybe to the short side from the fail at the top of the range yesterday. So it's still holding it intraday. This is holding a trend to the upside at the moment, so it's well worth watching the 127.44 to 47 area here. This lines up with that top over there at 127.47. So let's just put that in. All right, so pretty much 127.44 to 47 would be an area, and there's just a little imbalance down the 50-minute chart that got created yesterday that may need to be just a little area to get filled as well. I mean, it could get up to the 79% level as well. There is a little bit of imbalance in here too that hasn't been filled. There was the first imbalance, or the largest part of it, but it's been filled now to run at that point there. Just there. All right, so some levels to watch down the pound as it gets up higher in the day, if you can continue up. Pound yen, it's just touched the 79% level of this 4-hour downtrend. That 4-hour downtrend is coming from the failure of forming some kind of top of the range, double top. We're actually holding as well at a major monthly top over here. So we're at monthly resistance at 88.80. We traded up to 88.92. So, doing the work and having the monthly levels in, because that's traded like 12 pips above a major monthly high, historical high from quite a while ago, and that's holding the market along with the November high here. So it has been a little bit choppy in here, but the 4-hour trend from failing up here is in a downtrend. It's moved to a lower bottom. It's coming back up to a 79% point. That's a great selling level. If you had it on your chart a little bit like an hour ago, that would have been a good area to watch and take a trade, put your stop above the high yesterday. So you can still watch for a retest, but we've obviously moved down on the 4-hour chart. That's a lower top on the 4-hour chart to a lower low. Well, I think that was a higher top, but we moved to a lower point. So now you're watching for a lower top to form over here. So are we going to be failing at the 79% level? Trade down. We could come up for another retest of 118.18, so 180.18, and we could come up to test the resistance level at 188.28. So Yes, you've had the opportunity already to sell at the 79% level, but this would be the kind of sell zone. Price could still come up for a further retest. That would be the area to watch. I have already failed there. It might not come up for a second retest, but nonetheless, it could. So that's the area to watch if you haven't taken an opportunity. All right, Aussie yen. Day chart. I've been saying, are we topping out up here? 79% level of this decline. It's been holding at this weekly high over here, 97.66. Playing at this old double top. I said on Tuesday, so this is Thursday, Wednesday, Tuesday, I said. I think when I was doing the webinar, price was much more down here, and I said, watch, this could come back up for a retest. So it did on Wednesday and then declined. So it did an approximate, I think, 79% retracement. So we got 79% retracement, then a decline. Now, a bit difficult at the moment. It's down. You need to wait for a rally. And I don't know if it can come up for a high rally. We'll have to wait and see. But it's just trying to claw back the last previous drop on the 4-hour chart. So again, 79% of the big range is at 97.54. So of this high to low, the 79% level is at 97.54. And the 4-hour range is at 97.48. So that would be the area to watch if it can rally high once more. Did it Tuesday into Wednesday? Can it do it now, today into tomorrow? Or you get up there today and then move back down tomorrow, depending on what it wants to do. So always looking to sell a rally, but if you look at what price has been doing to prove the point, always looking to sell a rally for downtrends forming. It dropped from the resistance, rallied, that's a 79% level. Then it dropped, 79% retracement, dropped. Is it going to give you the third 79% retracement before it drops once more? All right, so I've been discussing the 97.54 level, the 79% level, and the resistance area for the last couple of weeks. So if you haven't been able to take advantage of that area, then I've been giving you plenty of ample warning that maybe price has been failing up there. All right, Aussie dollar, it's been failing at the get over to the Aussie. It's been holding and failing at the 66 level all week. So I've been looking for, this is the range of last week. I've been looking for price to come back up to 66.47. But it's never getting up there at the moment. And last week we failed at 67. This week we're just getting above 66 and then failing. So as I've been saying, this is the range of last week, and I've just been watching 66.47, but not getting quite there. We may get there or we may not. At the moment, we keep getting capped anywhere above 66. So at the moment for the day, forgetting where I'd like to be a seller at, which is up here. On a 4-hour chart, I would have a line across this top at 66.12 and see what happens if we can get up. If we get above 66 today, back to 66.12, that's where the market's been topping out all week. So don't know whether we can get up there, but I would be watching from 6600 to 66.12. Bit of an imbalance in here that may need to be filled. Drawing the fib across that range. 79% level at 66.08. Just a fraction above the fill of this imbalance. So price will, if it can keep going up, may come up just to fill the imbalance here, just above 66. or could get driven up to this area up here. All right, but I'm always looking at these levels for the failure. Just a matter of whether price can get up to those levels. So this is obviously the New York decline. Most pairs to US dollar showing you this. The New York decline after the New York news, US news yesterday. Every pair sold down. Are we going to see some kind of movement back up within the range of that sell-off before maybe further moving down? We'll have to wait and see. All right, New Zealand yen. Tuesday, I said watch up here, 79% level, and this resistance area. So 90.42 to 90.57 was where I was discussing. And you can see it held. It's a little choppy though at the moment. It's not being able to move down and through. Isn't being able to move down and through here. A little bit choppy, so it might come back up with all this choppiness that it's doing. We've obviously had this move down. It's come up to there, and then it's been choppy, choppy, choppy. It may well come back up to the same 79% level here again. There's two 4-hour tops up here. That would be the area if you want to trade this pair at the moment, which is rather choppy. This is the area to watch. So the area to watch, give you the exact numbers. These two tops. $90.55, $90.59, $90.57, 79% level. So that area there, that's where I'll be watching. All right, New Zealand dollar. This is where I was looking, where I'd like price to get to. This is my 4-hour chart. So on my day chart, I've got the field drawn across the swing point high to low in the downtrend, looking for a rally to complete for the next decline. We're just bouncing off an area of support at the moment, but the trend is down. All right, and long term, I'm looking for it's been down. I'm looking at that as a rally for a move down below that low. All right, so it's just having its sell off, looking for a rally to finish. It's getting some support just at 61 at the moment. Not looking to trade it up, but I am looking for a rally to finish. And the zone I'm watching at the moment is this, all these 4-hour lows in here. There's an imbalance in here that may need to be filled, and 62% level at 61.95. So around 62 would be a good area to watch. That means we need an 80-pip rally at the moment. Whether or not we can get that rally at the moment, I don't know. New Zealand as a currency is very weak. So, but it is holding at last month's low at the moment. So with that being said, just trying to trade the trend, but looking for, it's been down on the daily, looking for this rally to complete, and then looking for an opportunity to sell for the next move down. Dollar Canadian. All right. It's holding its uptrend by a move to daily. We've had a 62% retracement here on the day chart from high bottom to top. All right. So it's probably coming up to try and fill this imbalance area here. That's really on the 4-hour chart, but there's an imbalance there. And the trend is remaining up after last night's interest rate decision, I think, which remained the same from Canada. Price has moved up and could be moving up to potentially at least to test this area of resistance at 136.54. All right. Not easy to get in at the moment. You can, we're at the top of the move. Would, in a perfect world, the 4-hour chart here would be looking for a pullback. Moment, that's going to need to occur. I wouldn't be trying to be buying at the top of a move. I want to try and buy some kind of a dip. So I keep moving the fib up if it keeps moving up, but if that's where we are topping out, look to the 62 to 79% area. So 134.69 to down to 134.51. Looking for dip to continue that upward move to, it's probably going to come up and fill this imbalance over here. All right. Dollar franc. Now it's holding at monthly resistance. So this is one of the US dollar franc's one of the strongest pairs at the moment versus the US dollar. So this is the dollar franc, and the dollar franc's going down, which means this franc's getting strength. And what we are definitely seeing, if you just look at the time frames, is the monthly trend is quite clearly down, false breaking monthly support, coming back up to test broken support over here, which is holding the market. So monthly trend is down and the weekly trend is down. The day trend is up. So the big question is, with the US dollar moving up, is this going to continue to hold the day trend and reclaim all this decline? Or are we going to hold at 86.99 to continue the longer term decline? So depending on what side of the market you're on from a day chart uptrend perspective, it would be nice to see a pullback. I have been discussing this area, 85.52 and the 62% level 85.59. Of course, we haven't pulled back to that area yet. So if you're a buyer for this pair, that would be the area to watch. If you're a seller for the pair, then this sell-off here, I would look to the 4-hour chart for a rally back. So we've moved to a downtrend on the 4-hour here and look for then a rally back up to retest. 79% levels at 87.01 and the monthly levels at 86.99. So that would be an ideal area. And you would potentially then, if that was to occur and you have the sell bias, then you potentially could see holding at monthly resistance, we false break above, so it's left shoulder head, and you could see a right shoulder potentially form here. All right, so you can watch for that. If you're to the sell side, that could occur. If you're to the buy side, then support's down here at 85.52. All right. Now, dollar yen turned into a downtrend on the 4-hour chart after hitting. It's been very choppy in this area. Once it hit, that's what actually weekly support that was. So there was a weekly low here we broke. Came all the way back up to that level to hold at the moment. Double top up here. Trend change, rally. Are we forming a lower top here on the weekly chart? If we get a negative week this week, that will add some value to that. Day charts, trend may put a minor lower top here, but it's still a little bit choppy. On the 4-hour chart, we definitely had a decline to a lower bottom. So if you're to the sell side, after hitting that weekly resistance area, then look to the 79% level at 148.25. That's just underneath last month's high as well. And all this 4-hour resistance that's been forming to the left through here. So I would, that would be the area to watch if price could get up to that area. Of course, at the moment, it's just faltering just underneath the 62% level. But the volatility of the US news later in the day could drive that up to the 79% level. So 79% level is at 148.25. And again, some form of head and shoulder pattern could form there. You could see some kind of head and shoulder pattern there forming if price got up to the 79% level for sure. There's a little resistance area there. There's one there. And price can go a little bit higher. There's a whole area there. That's where the sellers are probably all located. All right. All right, so we're off for that rally up there on the dollar yen, and finally we'll just have a look at the gold. Back down to support. This is how I was drawing it out on Tuesday. It never quite got back up to retest the 62% level. Got close, but no cigar. All right, so at the moment, it's a little bit sideways. If you go to the weekly chart, lower top, but we're holding on weekly support, failing at these monthly or weekly. These are weekly highs, but they're also monthly highs. So which way is it going to break? Is it going to be able to break below weekly support? It has put a lower top in after false breaking the area, so it's a little negative. It looks more negative than positive to me at the moment. But it's just not in an area where you want to be selling. Don't want to sell into support. And in any actual fact, if it did trade down to 2009, that's the buy level at the moment. This may just want to stay between weekly support, 2009, and then monthly resistance from 2070 to 2079. So it is in a range. So really, if it's in a range, you have to tread like it's in a range until proven different. So really, any retest, let's go to the 4-hour chart here, any retest of 2009, and we actually tested it here and then rallied up to that point. So we could draw a fib from there to there because all this price action has been within this range. And if we got down to that 79% level, which overlaps with 2009, that most definitely would be, if you're a bullish for gold, that is your most optimum buy point at the moment. You can see we've just been a little short of it at the moment, so maybe it can't get down there, and maybe it's already turned the corner. All right, well, that would be the level to watch. 79% retracement there onto weekly supports, but rather range bound. But that would be the buy side to watch for at the moment on gold 2009. All right, so the big event is the Eurozone interest rate decision later in the day. You're coming in late, just to review from the news front here. These times are my time, Queensland time, but we have the Euro main refinancing rate monetary policy statement at 11:15, and then the ECB press conference at 11:45. That's where the fireworks are going to be going off at some point this evening. So at the moment, I think the euro dollar is just holding itself just under 109. That could be the main reference point for the day. Euro yen is just holding itself below 161. And the euro interest rate could affect the pound a little bit. So the pound could get up to this area up here at 127.44 to 47. So a few levels I'm watching at the moment. I actually did get short up here yesterday. I did say on Tuesday, watch 127.71 for failure. That was back up to the top of the range. And you often get price action like this just as from experience. This was when the pound or the UK flash services data came out. Big spike up to resistance level and it dropped down, came back up for retest and held. All right, and this, if you didn't sell it here, this was the time to sell on the retest. And I actually sold it up here with a 100 pip stop. And I'm looking, if we do a little bit more, just 5 minutes on the pound here. In fact, I might just put those things back in and bring up a fresh chart. There's a big question in my mind whether or not this is actually topping out long term. Let me open up a fresh chart. We've obviously had this range down into 22. We had a rally 23. But we rallied back up to this area of resistance here, 131.68. And we had a nice sell-off from that area. So the big question in my mind is that the first sell-off? Is this a rally to then sell off to move down this way? Like the big long-term picture, big long-term swings at the moment are down. Like this is corrective of that move. And then are we going to put some kind of major top in here to maybe move down? So if this high doesn't get taken out and it stays this year, and just looking at the weekly chart here, if we over the next month or two come down, we've had this move down, we've moved up to there. If we break this area here, that's going to shift the weekly trend back to clearly down. So, and we're just sitting at 62% level of the major range at 127.35. So it's a little sideways here at the moment because the market's deliberating. Are we topping out here? Are we going to put in maybe a significant top here now, which is going to be lower to that significant top for maybe a move down this year? I'll have to wait and see. So that's why I got short the other day. This could go sideways for a month or two if it really wants to, but on the day chart here, we're most definitely in a range. There's a number of ranges here, but that's roughly the range. So I got short at the top of where I thought the top of the range was, at this, just underneath that little high point there. I got short. And are we going to come at least back down to here? And if we can break that area, then we could be opening the gates to the downside. Of course, we could break north, but I'm just a little bit more to the downside. US dollar strength's been picking up, so inflation actually picked up on the US on the last inflation data. So did the UK. So there's a battle going on at the moment, and that's why price is in that sideways price action. So which way is it going to break? At the moment, it's just in a range. So you've got to trade it like it's a range. But if it does have a slight bias to the downside, selling at the top of the range for a potential break at the bottom of the range would be the way to go. So that's what I've done. I sold it at just underneath the 27.70 level yesterday. So we'll see how that goes. All right, everybody, any final questions before I wrap up? Just be aware of the Eurozone news coming out later in the day. Next week from me, let me just go to the webinar page. Going to join me next week. I've got coming up next week more analysis on Tuesday, the 30th. 31st, understanding a candlestick chart and identifying candlestick patterns will be my topic of education on Wednesday, and more analysis on the 1st. All my webinars at the moment are 8 p.m. Sydney time. In fact, I've got webinars next week, and then I'm away for a week. So just to give you a heads up. Yakuba, you want me to look at the pound Aussie? Okay. Right, monthly chart, we're in an uptrend, but it's just having a bit of difficulty here. So that's 92.21. Just above that at the moment. So 92.21, we're actually 100 pips above there. This is the monthly chart. So it's been struggling there, and it's in some weekly tops at the moment. So it's not just at the greatest point to be a buyer. If you're long, you want this area to break 93.41. So the big question at the moment is on the weekly scale here. Are we taking out these tops, or are we going to hold and fail? That's the big question. And now we get down to the day chart. We have 1, 2, 3, 4, 5, 6 candles here holding. So this is clearly being referenced by the market as a strong resistance area. So I don't know what you're trying to do, but this looks like potentially, if I drop this down to 4-hour chart, it's probably a 62% retracement area in here overlapping with that resistance area. So at the moment, I would say we're potentially holding here to go short. That 4-hour chart is starting to reverse down from there. All right, so I don't know what your bias is, but it looks like, clear resistance at the moment is the 93.41 level. Looks like a sell zone to me. All right. It's going to need at the moment, from a day chart perspective, quite clear that area is resistance. So from a day chart perspective, it hasn't yet closed above that level with any conviction. So it's just that's 93.41 level. There's a sell level until proven different. Until you get a strong close above there, or at least one close above there, because at the moment, getting no close above there. Just short of the 62 level, and it has come up to fill this imbalance in here that it formed. That's where it committed to move down that day. The price has come up to fill any imbalance that got formed in that area. So this could be a turnaround point for pound Aussie there. All right, that's my thoughts on the pound Aussie. All right, everybody. I'm going to leave it at that. Thanks very much for your attendance this evening. Hope you got some levels there that you can trade with. And have a great rest of the week. Have a great weekend. And if you have the time, look forward to seeing you next week. Thanks, everybody.